WOTW HD2 Windermere. Bud 94.1. From the attorneys Justin Clark and Associates YouHavePower.com studios, this is Behind the Law with attorney Justin Clark.
And welcome to the program, and thank you for joining me on another edition of Behind the Law. My name is Justin Clark. I'm here to answer any legal question that you might have. Anything from accident to zoning, give us a phone call right here, 321-282-1055. The website with plenty of information, www.youhavepower.com. You can listen to the show worldwide on iHeart, or you can watch it live on Facebook at ATTY. Justin Clark, joining me as always. To my right is my good friend and Orlando radio legend, Mick Dolan. Mick, what's up, buddy? How are you?
Hey, it's another day in paradise.
So this Chiefs outfit today, I'm a little confused, I would say.
Well,
is this just like I want to represent even though we're not in the playoffs anymore?
I'm a transplant.
Oh, you just don't have a lot of warm clothes.
That's true, too.
Okay, I got you.
Actually, that's true.
Okay.
I've worn through all my long sleeve stuff, and now I'm on part 2.
Well, thank you for being here, as always. Outside of the studio, making all this video stuff work, is Marketing Jake. And, you know, sometimes I wonder if he is really out there watching the show, or if he's just out there messing around.
I think he's checking
Talking
his email.
to the sales girls, maybe.
Maybe.
I'm not sure what's going on. And push the buttons.
Jake's the man.
Joining us, as always, my good friend Skid from 103.1 The Wolf. Skid, how are you, buddy?
I'm doing awesome, man. How are you?
Thanks for being here.
Yes.
Who do we like this weekend, by the way?
Jags.
You know what? I would love to see a Jags-Vikings Super Bowl.
Yeah.
I actually
That would
would.
be very
I
cool.
really would.
What's the spread? Anyone see the spread in
No,
the
I haven't
Pats
seen the
Jags
spread.
game?
Oh,
I mean,
I'm
it's
sure they're buried as far as the odds. But
we'll see. Should be a good weekend of
if
football.
the defense can get to Brady, that's the key.
We'll see. 321-282-1055. YouHavePower.com. You can watch the show again on Facebook at ATTY. Justin Clark. I think there are 4 real things that separate our firm from all the other firms, and 4 reasons why I think that you should call us if you're ever going through any type of legal issue. And the first thing is I'm nice, you know? And I know you laugh at me when I say that, but I think it makes a big difference because a lot of people that I'm working with are going through a difficult financial time. And we're going to talk about that, by the way. They're going through a difficult financial time, and I think the last thing they want is a guy in the $2,000 suit in the high-rise downtown who's going to look down on them, make them feel even worse than they already have.
Right.
My job is to get you through this time and make you feel better about the situation. I oftentimes will say, I'm not going to let you hire me unless you promise as you walk out of my office you're going to not stress about this anymore tonight.
Right.
Because people are bothered. They've been up all night long, stressed out about their financial problems, and I want them to hire me and then let those financial problems fall on my lap, and you go focus on your life.
Yeah.
Number 2, we offer free consultations always. We've never charged for a consultation. And you're like, well, I see that on TV all the time. But what you see on TV is the personal injury attorneys mostly, and they never charge for a consultation because they don't get paid till the end of the case. What you're going to find is lawyers who handle other types of law often will charge you to come see them. $300, $400, whatever it is. And I think that's kind of ridiculous. You know, if it's a divorce or a bankruptcy, whatever, I don't think that a lawyer really needs to charge this consultation fee. We never have, and we never will. Number 3, we offer flat fees with payment plans, meaning you know exactly what your case is going to cost from day one until the very end of the case. So you don't want some minor legal issue end up costing you $30,000 in legal fees. Mm-hmm. And that's not going to happen with us because we know what the cost of the case is going to be from beginning to end. And even that fee you can pay over time. We're going to essentially finance it for you. And it's not like, you go get braces and they say, oh, we do financing, but it's really just a credit card, Care Credit or whatever. And you got to pay interest on it. You don't pay us interest. You just pay the fee over time. And lastly, we have appointments on Saturday. You meet directly with me on Saturday. Now, you're also going to see Pilar and Sophia because I'm not allowed to work unless I bring my family as well. So they're there to help me. So if you're not offended by that, which I don't think you should be, you can see me on Saturday. I mean, who else does that? I'm not sending a little rook in on Saturday to see you. It's me. I'm going to be there to meet with you on Saturday. So many of my clients going through a tough time, I don't want them to have to take off work to come see me. And that is why I will see them on Saturday. And those are the 4 things that I believe separate our firm from any other firm really in the country, if you want the honest truth.
Justin, I have number 5.
Oh, go ahead.
A lawyer who will buy a horse for his 6-year-old daughter.
5-year-old.
5-year-old daughter.
Make matters worse.
has got to be the man to go with.
Whew. It's tough. Hey, she does have a horse. Horse's
there's
named
5
Cherokee.
now. There's
Thank
5,
you.
folks.
Thank
5.
you. You can keep Adam too. Keep
Okay.
them coming
All
if you
right,
want.
I
You want to
will.
go 6, 7? We
I'll
can.
think of some more.
321-282-1055. Thank you for spending some of your weekend here with me on Bud 94.1. I'm proud to announce as well that we have opened an office in Knoxville, Tennessee. So this is important to me because I spend a lot of time in Knoxville. I still have a lot of family there, and I think this is an underserved market nationally when you look at it. So Knoxville it's a town that's booming, but you're not seeing a lot of good law firms show up there. Like the Morgan & Morgans are in Nashville and Lexington. No one's really going into the Knoxville market yet. So we're there. YouHavePower.com. If you're watching in Knoxville or listening on iHeart in Knoxville, we're there for you now. We have an office right there in Kingston. So by all means, if you have any sort of legal issue, we're there for you in Knoxville, Tennessee. And it doesn't hurt that there's a direct Allegiant flight from the Easy Airport here, directly to Knoxville.
Yes.
The
Orlando
Sanford Airport.
Sanford.
You know?
No, it's Orlando Sanford.
Whatever they call it.
okay.
Branding schmanning. I don't care
all
about their branding.
Yeah.
I call it the airport closer to me that I don't have to wait in line in very long
Really?
with the direct flight to Knoxville.
Really?
Orlando Sanford International. Is that better?
That's it. That's
Orlando
the official way.
Sanford International. So last week, Mick, you asked me about these new tax rules that we keep seeing on the news between bashing the president. They're saying that there's some tax stuff going on. I will say the Little Rocket Man tweets, though, are funny. I mean, I've never seen a this is a new age, but the Little Rocket Man thing makes me laugh so much. Doesn't it?
And the button.
I mean, look.
Trump's button's bigger than his.
You gotta be kidding me with this. I'm not a real political guy. In fact, if anything, I would say I hate both parties. But he says some really dumb things on Twitter, and you would have to think that there would be someone in between him and the send button. But I don't know if there is, man.
There's not.
It's unbelievable.
It's his own. He does
And
it
some
himself.
of the stuff, I'm like, oh my God, I'm almost embarrassed that this is the president. But then when he says Little Rocket Man, and mine's bigger than yours.
Yes.
I mean, this is funny stuff.
It's Trump.
But my goodness, he really doesn't care. Anyway, but we have passed some new tax regulations, and that's what I want to talk about today. Let's pretend like we make $40,000 per year. How is your paycheck? Because that's all we really care about, right? It's what is coming in our pocket every 2 weeks or twice a month.
How much more do you see?
How is this really going to affect our paycheck? And let's look at it based on someone who makes $40,000 a year. Right now, if you make $40,000, your tax bracket essentially is 25%. So basically, you're going to pay 25% of your earnings to the government. Now, there are deductions you're going to take. You can itemize deductions, but your tax bracket is 25% if you make $40,000. Under this new plan, for anyone that makes between $38,000 and $82,000, your tax bracket, the rate is going to go down to 22%. Yeah, not a huge amount, but I think on average it says we're going to save about $750 for the average person making $40,000. So, yeah, $750 in your pocket.
Sure.
Certainly better than nothing. Now, the first draft of the bill, we had it down to 12%, but, they fought or whatever and ended up at 22%, which is better than 25%.
It beats it, the old rate.
But it's more of a bracketed thing, too. Let me explain how this works. So, for the first $9,325 of taxable income, you're going to pay 10% tax, all right? For the next $9,326 up to $37,000, 15%. And then 25% of any remaining income up to $91,000. So it's a structured
graduated
thing.
thing.
It's a graduated system. And most people are going to take the standard deductions here. If you're making $40,000, you're going to take the standard deductions because it increased to $12,000 deduction for individuals and $24,000 for families. So I think it's a big help. It's a step in the right direction. I think our tax code is still just insane. I mean, it's insanity really trying to figure out how to get through it and how to pay your taxes. But this is a step in the right direction. There's no doubt about it. So I think on average if you're making $40,000, you're going to save about $750 under this new tax code. But then when I see this and I start to think about about life and family and how we really get by financially, I really do shake my head. I mean, I don't understand sometimes how, because, sometimes people yell at me because I sit here on the radio and talk about bankruptcy and how I support bankruptcy. And I'm like, well, let's just go through it then. Let's take someone's real pay stub. And I know we did this a few months ago, but I have real numbers here that I want to go through with you. So now, woohoo, we saved $750 under the new tax code. Let's take someone who makes $65,000 a year. And let's see how we really survive on $65,000. We wonder why moms and dads both have to work anymore. And here's why. At $65,000 a year, that amounts to a $2,500 biweekly payment to you, gross, before anything comes out. $2,500 times 26, because there are 26 pay cycles in the year, equals $65,000. Great, $2,500 every 2 weeks. I can live on that, right? I can do that. So that's $5,000 a month. I can live off of that. Well, let's start taking stuff out, and let's see what we're really living on, and let's see what the real problem is here. Even under the new tax code at $2,500, your federal withholding is going to be around $400. I have a real pay statement here. I mean, you can really see it. $400 a month federal withholding, okay? Then we're going to pay Social Security of about $155 every 2 weeks out of this paycheck. Then we have Medicare, $36. Then, and the shocking number here to me, and this comes out of this person's paycheck every single paycheck. This isn't a once a month thing. This is both paychecks of the month. Yeah. For a family of four, $582 out of this paycheck for health insurance. So you have to double that to figure out what their premium is per month. That's $1,200.
That is a lot.
That's between $1,100 and $1,200 a month to insure your family. I don't know how people can afford it. Jeez. Then we have dental insurance as well. So this person has dental insurance, $48 a month. You subtract all that out, our gross looks pretty good, $2,500 every 2 weeks. I can live on that. Net, $1,278.
Half of it.
So let's think about this. So $1,278 times 2, right? So really our net in our pocket every month is about $2,500. I mean, have you looked around at rent lately?
Yeah,
do you know what rent costs?
There you go.
So at least now we paid our taxes.
That.
We paid our taxes. We have medical coverage. But now we got to think about rent.
Yeah.
Now we have to think about all the other expenses.
Or mortgage, easily.
So while this new tax code helping you $750 a year is great, step in the right direction, I'm going to show you how this money goes very quickly. Right on the other side of this break, Justin Clark with you on Bud 94.1. Welcome back to the show. My name is Justin Clark, and you are listening to Behind the Law on Bud 94.1. If you want to join us right here in the studio, 321-282-1055. The website, youhavepower.com. That is youhavepower.com. Listen to us nationwide on iHeart or watch us live. Or any old show on Facebook at ATTY Justin Clark. We're talking about how the United States government's helped us out a little bit tax-wise, okay? So if you make about $40,000 a year, let's think in terms of saving about $750 a year based on these new tax rates that we talked about earlier. But then I wanted to really look at a pay stub here and see what we are really living on per month. So I took a pay stub, someone at my office, that makes $65,000 a year. That sounds like a lot of money. I mean, it sounds like a really good, comfortable life.
I'll take it.
But then I was going through here and taking out these deductions, and after health insurance, taxes, dental insurance, this isn't like contributing to a 401k or anything. This is $1,278 every 2 weeks. So most of our bills we pay monthly, so let's just double that. So $1,278 a month is about $2,500 net per month, right?
Okay.
What's the cheapest you see rent, especially if you have a family? I mean, $1,200 is that about
$1,200.
the cheapest you can go, isn't it?
If you can get it for $1,000 or less, you're in great shape. But
So-
that's for a studio.
So let's just say we find a good house, or someone we know is going to rent us a steal here at $1,200 a month. That leaves $1,300 a month for the rest of our bills. Now, we can have the should I cancel cable or not debate if you want. But let's just say Wi-Fi, cable, everything is $200, $300. I mean, what's average?
200.
I mean, there's
Not
another
3.
$200
I
that
hope not 3.
because I'm got to tell you, I'm getting close to canceling this satellite stuff. I think we're getting close to being able to do that. I mean, if you have Wi-Fi, there are so many devices now, whether it's Apple TV or these Fire Sticks. I mean, I don't know. I'm getting close. I'm not there yet, but I'm getting way close.
But at the end of the day, after you come home from work and you sit down, you just want to relax, and you got to do all the go on Hulu, we got to do this and do that. It's like, yeah.
Here's my
no.
feeling about that. I think
Too
that
much
I use
trouble.
television as sort of a crutch, and I sit there and just turn it on. But if I have to go look for something to watch, maybe I'll do something a little more productive with my life. Maybe I'll go outside or something. You know what I mean? Like we used to do in the old
Yeah,
days.
yeah.
Although your old days were a little older than mine, weren't they?
I'm afraid so. I'm afraid so,
kidding.
buddy.
Maybe I'll go fishing.
But you're never too old to rock and roll.
That's right, big
Okay,
boy.
All right.
So anyway, we pay rent $1,200 and another $200 for the Wi-Fi, cable, or whatever. Now we're down to $1,100. I mean, let's just say it's a family of 3. What do we really pay for? Even if you don't go out, let's say we're not going to Applebee's twice a week. Just for food from the grocery store, at least $500, $400.
I would think so, yeah.
I mean, even if you say $400, so now we're down to about $600, $700 left to pay other bills. I mean, we have cars, we have insurance, we have everything.
Well, you're not even taking into consideration car payment. Oh.
The point of the story is it goes very quickly, okay?
Yeah.
And the assumptions that I'm making with this person's pay stub is that they do not have any old credit card debt or any old IRS debt or anyone suing them for anything from mistakes they've made in the past.
You're piling on here.
We've all been in this situation. So if you want to judge someone for being in this situation and the decision was, should I take out a credit card and feed my family and make sure that we have everything that we need and put it on a credit card? Because if not, I couldn't get it. If we're going to judge them for doing that and running up some credit card debts, then shame on you, okay? Because I have a family too. I know what it's like. And if it comes down to it, I'm going to take out as much credit card debt as I need to take care of them. But here is the problem. We live on a good amount, $5,000 a month. After taxes and everything else, it's $2,500. After we pay just the basic expenses, we have zero left. And when there's zero left, how in the world are we going to pay for these old credit card debts, right? So here's a good thing for credit card companies back in the 1800s, and especially in Western Europe. If you didn't pay them, they could throw you in jail. You've heard of the poorhouse.
Sure.
You heard of the poorhouse, right?
Yeah.
They
Debtor's
could
prison.
throw you in jail. They could put you in what we call debtor's prison. We even had debtor's prisons up until like the mid-1800s in the United States. James Wilson, who was an associate justice of the U.S. Supreme Court, was in debtor prison. Robert Morris signed the Declaration of Independence. He was in debtor's prison. Now think about that. Let's think that we still could put people in debtor's prison. I mean, what would that do to this country?
That would fill the prisons.
Well, we couldn't afford to keep all these people in prison.
No.
So, thank goodness, in the United States Constitution, our founding fathers were smart enough to include Article 1, Section 8, Clause 4. You know I don't like to use numbers and things like this on this show, but I think it was
you just
important to
did.
tell you this.
Yeah.
I'm not that guy, but I did it. All right, fine. The Congress shall have the power to establish uniform laws. This is from the Constitution of the U.S. Uniform laws on the subject of bankruptcies throughout the United States. You have a constitutional right to not go to jail for trying to feed your family and racking up a little bit of credit card debt. And the way you do that is by filing bankruptcy. The point of this little exercise here for me was to let you know that it's okay, that it's tough. I mean, it is tough with all of these taxes that we have to pay.
The figures don't lie.
The figures, I mean, when you just do a little personal profit and loss statement for your household, and let's see where we're at. Because if you find yourself robbing Peter to pay Paul consistently, what's going to happen is you're going to be up at night stressed out. And then you're going to create family problems because of the stress from the financial problems, then which lead to medical problems. And there's no reason to do that. Don't put yourself through it. Give me a call, 321-282-1055. There's plenty of information on the website about this subject, www.youhavepower.com. Don't feel bad. I have people come in all the time, and I tell them, I don't think this is right for you. I think that you can afford to pay the bills. I tell people that all the time. Yeah. Bankruptcy is not right for everyone, but if you find yourself at zero at the end of every month, stressed out as hell, it's worth a conversation. The conversation is absolutely free with me, and let's see what's right for you. Bankruptcy is not always right.
You brought up a good point. It's like take a look at your own personal finances. See where all the money really is going, because it's an eye opener. You just don't realize where it's going.
It's absolutely insane. So if you have any questions, again, 321-282-1055. Look, I'm proud of them for making some progress, lowering the tax rates a little bit for those who really need it to be lowered.
Then there's the business end of it, too.
The business end as well. And so that's the whole political debate when it comes to business guys or rich people. It's okay. Do we lower their taxes so they reinvest in their business and create jobs or not? And I don't know who's right. Do you have a feeling on that? Because I don't know. I'm not smart enough to know.
Well, I think some companies are stepping up.
Yeah. I mean,
you hear about it, and it's like, whoa, okay.
So, the debate, the age-old debate is, do we lower taxes for rich people in hopes that they're going to go create jobs and create wealth for the government or not? Or are they just going to keep it in their pocket? And I don't know. I'm not an economist. I just don't know.
I think the difference today is the social media aspect. I mean, if a business is not doing the right thing, people are going to step up, and they're going to have to deal with it.
I mean, people have more of a voice now because of social media than they ever have in the past. There's no doubt about it. I really love what John Morgan has sort of created. He's coined this term, compassionate capitalist.
Yeah.
Have you heard that?
Yes.
I like that. I mean, that makes sense to me.
Sure it does.
They
know they have a responsibility, and they're trying to take care of it.
I've never really understood the whole right wing stuff with the, gay people can't get married, blah, all that BS. I don't like. I mean, come on, really? I mean, we're really going to focus on that. But then I also don't think that someone who doesn't have a lot of money should get upgraded to first class just because they're poor either. Right. So there's some middle ground here, and me personally, I've always sort of tried to find myself politically. And
voice of reason.
I think I'm more of an issue guy, but I like the compassionate capitalist idea. I think that's fantastic, right? 321-282-1055. We're going to switch gears a little bit here too, because I've had so many people come into my office recently with problems with their homeowners associations. Yes. Homeowners associations, look, I mean, I guess they're necessary to keep our neighborhoods up, make sure that everyone's lawns are cut perfectly or whatever, but they can be an overbearing disaster in your life, because what typically happens is you get some retired person or someone who's not really working a lot or whatever, who becomes the board, they get on the board or the president or whatever, and they just want to come by and
nitpicker
and just nitpick everything, and it can become a real fight and a real financial tragedy in your life. And here's what I want to warn you about, because, and I've been saying this on the airwaves in this town for a decade, but people still don't understand. If you don't pay your homeowners association bills, or if they fine you and you don't pay it, or if there's an assessment and you don't pay it, they can come and foreclose on your house and take your house just like a bank can, just like Bank of America can. So you need to be I'm not saying you should, I'm not saying that if you're right and they're wrongly charging you for something not to fight it.
Right.
But I'm saying don't just say, screw you, I'm not doing anything, and just, because they can come take your house.
It won't go
away. So
you
have to fight back. You need to hire a lawyer to fight back on your behalf, because if not, they can foreclose on you. They can come take your house just like a bank. But here's the difference. these banks send all of their foreclosure cases to like big foreclosure mill law firms typically. The homeowners associations have very, very talented lawyers here locally who specialize in nothing but homeowners association. All they do is HOA law. And they're going to come take your house 3 times faster than the bank. I guarantee it almost that they're going to take your house way faster than any bank is going to. And another thing to watch out for, there's this whole underbelly of this investment world. We call them third-party bidders. And they come in and all they do for their whole job is to go around and look for homeowners association foreclosures. And they come buy them. And then they kick you out of your house. And then they rent your home to someone else until the bank forecloses on you. You know, talk about a kick in the face.
Really, vipers.
So now you have paid your mortgage, right? Got in a fight with your homeowners association, but now you've gotten kicked out of your house, but you still owe the mortgage, but you don't own the house anymore. I'm going to tell you how to solve that problem if you have any problem with your homeowners association right on the other side of this break. My name is Justin Clark. The phone number here, 321-282-1055. Be right back with you on Bud 94.1. Welcome back to Behind the Law with me, attorney Justin Clark on Bud 94.1. If you have any question, 321-282-1055. Plenty of answers to all of your questions as well on the website, www.youhavepower.com. You can watch the show live on Facebook, whether you're in Knoxville, Tennessee, where our new office is, or anywhere throughout Central Florida where we've been for a long, long time. I'm here with my good friend and Orlando radio legend Mick Dolan. He's the one wearing the Chiefs shirt. If you're watching, so
next
we can't.
Year, wait till next year, and the year after, and the year after.
I thought you'd be wearing your Browns gear too, Skid.
Yeah, but no, I've moved on.
It's still
I moved on after week 1, actually. So we don't say wait till next year anymore because we know what's going to happen next year.
But that's what you said last year at this time.
Yeah, that's why I don't even do it.
Skid's hit's still dirty from the parade.
Yeah.
Really.
How'd that parade go, by the way,
That
for the
parade
Browns?
was, you know what? 5,000 people showed up in Cleveland
Nice.
to celebrate the fact that we lost
A
every
bunch of
single game.
losers.
Unbelievable.
Yeah. How awesome is that, huh?
And another half hour here with you on Bud 94.1. The last segment, I'm going to, a lot of people have been emailing me recently. I'm going to answer your emails in the last segment. But I want to finish up this homeowners association debate because it makes me nervous. Everyone knows that if you don't pay your mortgage, the bank can come foreclose on you, right? I mean, that's pretty self-explanatory.
Sure.
If you don't pay Bank of America or you don't pay Chase or whoever it is, they can come take your house. Fortunately, we live in a state, it's called a lien theory state. We don't own it with the bank. They just have a lien against it, so it takes them a while to actually foreclose on your house.
Okay.
Some states, you own it with them. Like in Tennessee, you own the house jointly, essentially, with the bank, and they can send you a letter and kick you right out of there pretty quickly. Here, it takes a year, 2 years sometimes for the bank to actually do it.
I didn't know that.
But the problem is the homeowners associations. I don't know what percentage, but most homes, it seems like in Florida, are within some sort of homeowners association, right? You're not,
No.
but that's why you have a green house next to you.
It's an older neighborhood.
But most of them are. And all the time, homeowners are fighting with their board of directors from the HOA. It happens all the time, right? So they will levy a fine against you for not cutting your grass, whatever, or having the dead spot in the yard.
The roof.
All these crazy, stupid fines because you have someone running the board who has nothing better to do other than drive around and snoop around on you, right? I mean, that's it. I mean, most of these board of directors people aren't working.
They have good intentions, but
Do they?
They've got too much time on
Maybe.
their hands.
I think they're just, a lot of them are just nosy. But what they do is they fine you. So now we want to fight back. Most people just say, look, I'm not paying that fine. Screw you. You're in the wrong. But here's the problem. If you do that, they can come and foreclose on your house, and they're going to do it faster than the bank because homeowners associations have local attorneys. So all they do is HOA law. They can come foreclose on you way faster than any lender can. But the scariest part about all this is there are all these investment groups. They're not buying bank foreclosures. They're coming in to only buy homeowners association foreclosures. And here's the best one for them. The best one is the homeowner who's current on their mortgage. They're not in foreclosure with the bank. And then they come in and scoop up the HOA foreclosure. They'll pay them $30,000. I mean, they'll pay the HOA $40,000 because they know it's going to take a long time for the bank to come foreclose on you because you're still current. They're going to kick you out of the house. And now you have no control whatsoever. You don't own the house anymore. The HOA just kicked you out. Someone else bought it. This third-party investor bought the house. You're out of luck. You don't own it anymore. But you still owe Bank of America $300,000. Or you still owe Wells Fargo $400,000.
But the person who bought it, the homeowners or the investor,
Let's call him the third-party bidder.
Okay.
Yeah.
Well, but he has no obligation to
None.
pay the
Absolutely not.
But he bought the house.
He bought the house from the homeowners association foreclosure. He was the highest bidder on the auction steps at the foreclosure auction. The bank now has to come foreclose on the house. Yeah. But he's not obligated to pay the mortgage, so he's going to rent the house to someone else.
Yeah.
For as long as he can.
Yeah.
He's going to hire a lawyer to defend the foreclosure as long as he can to make a profit from what he bought it for.
Right.
Yeah, you're out of luck. Now you can't short sale or you can't deed in
Can't do
lieu or
anything.
you can't try to do a loan mod because you don't own the house. You're SOL, as they say. Yeah. So be very, very careful when you have these fights with the homeowners associations. And I really want you to call someone like me. Our phone number is 321-282-1055. Website, youhavepower.com. You can direct message me on Facebook if you want, at ATTY Justin Clark. So let me tell you about the foreclosure process for a homeowners association typically. So they're going to send you a letter saying you owe money. You know, whether it's from a fine or whether it's just your regular monthly payments have got behind.
Right.
Maybe you missed a payment and you can't believe they're charging you all this interest, and then it just compounds on itself.
Special assessment.
The special assessment for whatever, for the new wall, whatever it is. Yeah. So they're going to send you a letter saying you owe us this money. You're going to get mad and say, throw the letter away. That's what happens most of the time. Then they're going to put a lien against your house. And then they're going to actually file a foreclosure lawsuit against you. And this one, at least, they have to come serve. I mean, they have to have someone come to your house, knock on your door, sheriff or whatever, and hand it to you. And you're going to have 20 days to respond. If this happens, please don't mess around. We have to respond within 20 days. If we do not respond, they can default you in the case, meaning you have no more say in the matter. You're pretty much done unless you have an excellent reason as to why you did not respond to this foreclosure complaint within 20 days. From that point forward, let's say you come in. So you're like, Justin, I don't owe all this money. Okay, that's fine. Let's file a motion to dismiss the case and then have a hearing on that. Or let's file an answer and let's really go to fight on it, because then they're going to file a motion for summary judgment within a month or two. I mean, this is going to go, this is like a 4 to 6 month deal. Right. Whereas the bank, 1 to 2 years, HOA, 4 to 6 months maximum before they can kick you out of the house. So we have to fight back. Let's try to settle with them. Maybe some type of payment plan, or maybe they're just wrong and we go to court and we beat them. Yeah? And now they have to pay your attorney's fees. Right. Now we've really won. But the thing not to do is to bury our head in the sand. It's sand. One sand. It's multiple grains of sand. Yes, but I think it's probably just called sand. Mick, what do you think?
I think sand will go with it.
So be careful.
Yeah.
The bank foreclosures take longer. We have a little bit more power in that. But once you lose the house to HOA, we're pretty much done. The beautiful part about it is we can file bankruptcy up until the moment before the foreclosure sale. So if things go really badly and they already have a sale date set, the sale date's going to be at 11 a.m., whatever day of the week it is, at 11 a.m.
10:59.
If we file this bad boy at 10:59, boom, it automatically stops it. No one can do anything about it. It's stopped. It cannot go forward. And then we can hopefully get them wiped out. Another beautiful thing. I've told you before, Mick, when we file a Chapter 13 bankruptcy, we can many times get the second mortgage wiped out.
Right.
If you have a second mortgage, wipe it out. Well, an HOA lien is considered the same exact thing as a second mortgage.
So that'll go away.
So let's say you owe them 10 grand, 18 grand, 20 grand, whatever it might be. If you owe more on your first mortgage than your house is worth, we can strip away the HOA lien as well. So there are plenty of options. Be very careful with the homeowners associations. A lot of stuff you can do, but the only thing you can't do is hope that it goes away, because it won't.
Because it won't.
It just simply will not go away. 321-282-1055. YouHavePower.com. My name is Justin Clark. And, I always ask people if they have any questions, feel free to email me directly, jclark@youhavepower.com. And I've been getting a lot of emails, and I feel like I just keep yapping every day, and I never get to answer some of these emails. So I'm going to today. All right. We left a little time to do this today.
Right.
So I'm going to. Email number 1 from Cassandra. Dear Justin, yes? Can I keep my car during bankruptcy? And this is a question I get a lot. So Cassandra, thank you for asking. And you can. The beautiful part, if you file bankruptcy, it's going to be our choice as to whether we want to file bankruptcy or whether we want to keep the car or not. And there are a lot of things that go into that decision. Number 1 is, what's the rate? I mean, is it like one of these buy here, pay here things where your rate is 30% or 25%? Maybe we don't want to keep it. Or if you file a Chapter 13 bankruptcy and you have a very high rate, we can many times get that rate reduced to 5%. So if you do want to keep your car, but you still want to file bankruptcy, you can absolutely keep it. And many times there are programs where we can get the rate significantly reduced, where you can keep it and lower the payment. But if you don't really care if you keep it or not, you can put it into the bankruptcy, and the bank then, whoever the lender is on the car, can never sue you for the deficiency amount.
What if you own the car already?
If you own it outright?
Yeah.
Well, it depends on the value at that point.
They couldn't take that, could they?
Well, they could. So if you file Chapter 7 bankruptcy, you own the car free and clear, it really comes down to value. So if the car is worth a lot and you file a Chapter 7 bankruptcy, the trustee might want you to buy the car back or give it to them to sell it to pay off some of your creditors. So it really does make a difference how much you owe on the loan, if there's a loan, what the car is worth, what kind of condition the car is in. But the good thing, the power and the ball is all in your court, and we can make those decisions together, whether it's good to keep it, get rid of it, lower the interest rate, or how we're going to deal with that car.
You got options.
But the answer is yes. Just because you're filing bankruptcy does not mean that you have to give up your car. Dear JC, isn't that Jesus Christ?
Yeah, but
okay.
Not in this case.
I'll take it. Yes, I'm in foreclosure, but I want to keep my home. Great. Plenty of options for someone that's still in foreclosure. You got behind on the mortgage for whatever reason, or you were trying to do a loan modification. They said, don't worry, miss a few payments, we'll work with you. But then they didn't, and then they filed a lawsuit against you. Now they're trying to come take your house. A plethora of options. I'm in foreclosure. I want to keep my house. What do you do? Well, number 1 is we could try to do a loan modification without filing bankruptcy at all. So we will defend the foreclosure, give us some time to work out some kind of deal with the mortgage company. In a loan modification, they can go all the way down to a 2% interest rate. They can also do a principal reduction. If you're still underwater, the bank has the right to do a principal reduction. So if you owe $300,000 and it's worth $180,000, they have the right to try to reduce it to get it closer to $180,000. It doesn't happen very often, but it can happen. If you have Fannie or Freddie, if they're the investors on the loan, they will not reduce the principal. But a loan modification is an absolute option you have, no matter what stage of foreclosure that you're in. So if you don't have a lot of other debt, but you want to keep your house, I think we should absolutely look at a loan modification first. Now, let's say I don't have any other debt. Fine, loan modification. But if you do have a lot of other debt, what do you do if you're in foreclosure but want to save your home? We will talk about that. One more segment ahead. My name is Justin Clark, 321-282-1055, Bud 94.1. Anytime you're ready.
All right. There we go. Here. We go.
Tell T. Will. Thank you, and welcome back to the show. Thank you, Marketing Jake, for getting me right side up or upside down, tilted. 3, 2, 1, 282.
He just made it. He didn't get you.
1055. YouHavePower.com. Mick Dolan looks like a stop sign today. But yeah, actually like a caution light in the middle of it.
Beware. Go no further.
Taking your questions, right? So I've been telling you all year to email me whatever questions you have, and I will read them on the air and answer them for you. And I haven't gotten to those this year. I promised this last segment that's what we're going to do. And if you do have questions, you can email me directly, jclark@youhavepower.com, or you can watch this show on Facebook and send me a direct message at ATTY Justin Clark. You can also chat with me live if you go to the website, youhavepower.com. I actually do those chats myself. I literally sit there and
So it's
and
not
talk
a
to people.
robot.
It's not a robot. I'm not someone in the far, far east. You know what I mean?
Good. Good.
It's actually me.
Wow.
All right, next question is, can I wipe out my tax debt in bankruptcy? And this is a great question, actually, because most people believe the IRS debt is not dischargeable in bankruptcy, and that belief is absolutely incorrect, because you can't. Let me give you a little rule of thumb on this. So whoever asked this question obviously has some tax debt that they're dealing with. I think we need to look at it and see what other debts you have. But your tax debt, if it's 3 years old or older, can absolutely be dischargeable in a bankruptcy. In an easy Chapter 7 bankruptcy, you can wipe out all of your IRS debt. It's amazing.
Up to how much?
Up to however much. There's an unlimited amount, but it has to be more than 3 years old. So you had to have filed it at least 3 years ago. So you have to look at that, and then you also have to look and see if they put a lien on your house, because if there's a lien on the house, you have to deal with that as well. So in theory, you could wipe out your tax debt but still have the lien on your house, meaning you don't personally owe the tax debt, but if you go to sell your house, there's still a lien. So there's a lot of evaluation that goes on there about what the best way to handle it is. But yes, you can wipe out tax debt in a bankruptcy, tax debt that's more than 3 years old, but it's very complicated and not something you should try to do yourself. And there's really a calculation that goes into it. When did you file it? Did they audit you? Those sort of things. You have to look at all of that to see if it's dischargeable.
Keep good records.
Yeah, absolutely. Keep good records. Dear Justin, can the bankruptcy trustee take my 401k?
Ooh.
That's a good question, and I get that a lot too. These are all fantastic questions. Keep them coming. So a 401k is protected. Think in terms of, let's say you didn't pay American Express, they sue you and get a judgment against you. What could then they come try to take from you? Do you think they could take your house?
I hope not.
No, they can't. The house is protected. You have homestead protection on your primary home. They can't take it. But your car? Sure. Your bank account? Sure. Anytime you get a judgment against you, it's difficult for people to collect. But once they have that judgment, they can come collect. They can try to take your car, your bank accounts, your paycheck. They can try to garnish your wages. But there are certain things that are absolutely protected, like an IRA, okay, or a 401k. These typical retirement account type scenarios are most often protected. And what that also means is the trustee can't come and try to take it as well if you file bankruptcy. So generally speaking, an IRA, a 401k, those sort of retirement plans are protected and exempt, and no one can ever take them. And that's why that's a great way to save money, is because it's protected from creditors. So when you hear your financial advisor begging you to put some money away in the 401k or add to your IRA,
Yeah.
a lot of that is because they know that it's a protected way to keep you from losing your money. And it also means the bankruptcy trustee cannot come get it.
Would it be advisable to take cash assets that maybe you have before you file and go ahead and dump them into an IRA or a 401?
Yeah, I mean, there's a look back period, so you need to be careful that you're not doing it fraudulently,
Right.
So it's really good to get a lawyer's advice who does asset protection or who does bankruptcy, and will tell you how to strategically try to protect your assets. I mean, that's all there is to it.
Define fraudulent.
Yeah, let's do that in my office.
Yeah, really, it could be a whole lot of.
Don't hit record. Dear Jay, yes, that's me. How do I know if I qualify for an OIC? All right, what's an OIC? An OIC, this isn't back to the IRS stuff. An OIC is an offer in compromise. Essentially, it's a fancy term for a settlement with the government, a settlement with the IRS.